Okay, relax. Start. Hi everyone, welcome back to the Chartereds Academy YouTube channel. I am Ashok Muttuvaina from Chartereds Academy. So, what is the purpose of this video, answer? We are going to conduct the revision classes for the CA CMA Final DT. CA CMA Final DT, for who are going to write their exams for November 2024 for CA, for CMA for December. Okay, exams in the full English manner. The mode of language is the full English manner. So the main purpose of this revision videos, the who are facing to understand the Hindi videos, we can help to only that type of students, sir. So if any grammatical mistakes while teaching this subject, please ignore it. We can use the 100% basic English only. Can use the 100% basic English. Okay. The agenda of these sessions, we have to complete almost all A category of the chapters. So today topic is taxation of charitable trust. Today topic is taxation of charitable trust and religious trust. We can expect 6 to 7 marks in our exam. So let us revise the entire charitable trust in maximum 1 to 2 hours with the questions, with important questions. Okay. Sir, what is the meaning of charitable trust? Okay, what is the meaning of charitable trust? What is a charitable? So if any entity, if any organization established for the doing the charitable activities, such entity we treat as a charitable purpose. Such entity we treat as a charitable. For example, any X Limited or X organization established for the doing the charitable activities. Their main objective is the doing the charitable. Then such organization we treat it as a charitable organization, charitable trust. So what is the charitable activities? These are we treated as the charitable activities as per the Income Tax Act. What is that, sir? Very simple, sir. Relief of food, education, yoga, medical relief, preservation of environment. Sir, what is the meaning of preservation of environment? Including, for example, protection of forest, protection of wildlife, protection of watershed, everything, sir. And preservation momentum, sir. And for example, in Hyderabad there is a Golconda. So every time Golconda we have to renovate the Golcondas and renovate the Charminar. That is the preservation momentums, which are the representing our histories, which buildings are representing our that treated as a momentum. So can represent momentums and places and objects. This is all treated as a charitable activity. It is all treated as a charitable. What is the main agenda of this chapter, sir? Simply, how much of amount we are going to tax under the income tax. So whatever the income earned by the charitable trust, how much of amount we are going to tax under the income tax, how much of amount is going to exempt under the income tax. So that is our main agenda of this chapter, sir. Rather, other than that, there is no risk. So simply we can say, concentrate here. Okay, sir. Taxation, we talk about the taxation of trust and institution. Taxation of trust and institution. How many sections covered in this? Section 11, Section 12, Section 13, Section 115 BBI, Section 115 BBC and 1023. So all the sections covered in this chapter. First I am talking about what is the income of the charitable trust. What is the income of the charitable trust? Mainly donation from the others. So anyone can donate the trust. So that is a major source of income for the trust. Sometimes we can receipt. Sometimes if any trust run the schools, we can collect the fees from the students. So receipts from the doing the business. That is also another income from the trust. Another one, capital gains. Sir, if the trust have any buildings or any properties, any capital, if sell that capital asset, you get the capital gain. That is also income from the trust. And sometimes the government gives us some grants to the charitable trust and religious. That is also income from the trust. So what is the main source of income for the trust, sir? Donations, receipt from the doing the business, and capital gains on sale of the properties, and if any government given the grants. So all these treated as the income for the charitable trust. So how much of income going to taxable under the income tax? How much of income going to exempt under the income tax? That is our main agenda. So in the donations, we have the two types of donations, corpus donation and other donation. So simply, corpus donation is not your income, it is a capital nature. Take an example of if any shareholders invest in the company, that is a share capital. Share capital not is your income, that is a capital. So simply corpus donation like your capital. So corporate donation is the fully exempt. Corporate donation is the fully exempt. Whatever the corpus donation received by the charitable trust is fully exempt if invested in the 11.5 modes. If invested in the 11.5 modes. If not invested in the 11.5 modes, it will be taxable under the income tax. Okay. Okay. Sir, if any other donation, what can you do? Any others? I will take one example. Don't worry, sir. If the trust have a 20 lakhs income, Sir, what things are compromises this income? What things are consist of this income? Very simple, sir. Donation. But that donation not included the corpus donation because corpus donation not your income. Again repeating, corpus donation is not your income. Next, government grants may be included, capital gain may be included, and receipts may be included. So simply, what is this? In the 20 lakhs income, if the trust income arrayed from the property under this trust, simply out of 20 lakhs, 15% is straight away exempt under the income tax. So whatever the income earned by the trust, out of the 15% is straight away the income from the tax. Simply 15% give the standard deduction, like a salary, sir. Whatever the salary, 50,000 is a standard deduction. For same thing applicable to the income tax also. Whatever the income, so in the 20 lakhs, 15% is the standard deduction. Simply 3 lakhs will be the exempt. So what about the remaining 85%? What about the remaining 85%? So remaining 85% is the 17 lakhs. Out of the 17 lakhs, out of the 85%, whatever the amount applied for the charitable purpose, whatever the amount is applied for the charitable purpose in India, that is very important. In India, whatever the amount applied for the charitable purpose in India, that only exempt under the income tax. Whatever remaining balance will be the taxable. In my example, 20 lakhs my income, out of the 15% is a standard deduction, 3 lakhs is exempt, remaining 85%, 17 lakhs. Out of the 17 lakhs, 10 lakhs we applied for the charitable purpose in India. Sir, if any amount is applied for the outside India, that will not get any exempt. Will not get any exempt for that income. That will not get any exempt for. But whatever the amount you incurred in India, only get the exemption for that income. So whatever the amount applied for the charitable purpose in India, we get the exemption. 10 lakhs, remaining 7 lakhs is the taxable. Now we can get the clarity. So check, sir, how many types of income. So we have a corpus donation always exempt, we deposit in the 11.5 modes. So remaining 15% of the exempt is there. Remaining 85% which are applied for the either charitable or religious purpose in India, then such income is the exempt. Okay, now such income is the exempt. Okay. Explanation 1, I talking about the explanation number 1, sir. I will just take one example. So the charitable trust run the one functional. Okay, now. So I go and book the functional for my marriage on 31st March 2024. So they also book the amount as a revenue in their books of accounts. But in 31st March 2020, due to some other reasons, my marriage was cancelled. And trust will not receive any income from my income. But we have a situation, we have one condition, whatever the income anyway should be applied for the charitable, then only we get the exempt. Otherwise, we will be liable to tax under the income tax. But how can you trust incur the expenditure without money? Because trust not receive anything from the SSC, trust not receive anything from their clients, trust not receive from anything from the donor, their clients. But how can you incur this? How can trust able to incur this? That's why income tax bring the one rule. What is the one exception, sir? What is the one exception? Sir, if SSC, for the reason who are not receiving any part of income not receiving during the previous year. So, but we are booked as income but not received due to any other reason. The reason will be the not receiving any income during the previous year. Simply, the SSC file one declaration. The SSC file one declaration to the AO. At least 2 months before the due date of filing. And that such income is actually applied in the year of receipt or in the immediate next year. Okay, now if not applied, so that will be deemed to be applied in the current previous year. Very simple, sir. Sir, if any trust not receive the income, so the trust file one declaration to the AO. In the declaration, in that form, they declaration that, sir, we are going to apply that income in the year of receipt or at least next bonus year. If you are not able to apply that income, that will be taxable in the next bonus year. We'll take an example, don't worry. So this 7 lakhs is the taxable. Explanation number 1. Option number 1. This any reason due to the outstanding. I follow form number 9 here. Form number 9A. Okay, form number 9A. So because I am unable to receive the money and I am able to receive, that's why I am not able to apply it for the charitable, not able to apply it for the charitable purpose. Just to file a declaration. So but when it is, so it is treated as a deemed applied in the current year. It is treated as a deemed applied in the current year. Deemed applied in the current year. Deemed applied in the current year. Okay, deemed applied in the current year. Okay, okay sir. But when we to apply, sir, you receive the 14 to 2016, that amount will be received. That amount will be received. That amount will be received. So we need to apply at least in the year of receipt 25-26, in the year of receipt, or next bonus year 26-27. So if you are not able to apply that amount when you are received, or at least next bonus year, that will be liable to tax under the income tax in the next bonus year, and it will be liable to tax under the 26-27. So how much of the tax rate will be the 30%? The tax rate will be the 30%. Tax rate will be the 30%. Okay, so this is one option, sir. Sir, that is the one option. Second one is the, for any other reason, sir, not outstanding reason, this is any other reason, we are like a bumper donation. In the 31st March, we receive the lump sum amount. We are not able to apply that amount in the one day. In the 1st April, 2nd April, we are not able to apply it in the one day. So, student, if SSC, then in that situation, SC submit the declaration to the AO. SC submit the declaration to AO at least 2 months before. What is the due date to submit? At least 2 months before. Okay, before the due date of filing of return of income, and that could not be applied in the current previous year. Not required to applied in the current previous year, but in as per income tax, we consider that is a deemed to be applied in the current year. That will be deemed to be applied in the current year, but there should be any reason other than outstanding reason. Sir, we are not applied due to the outstanding, we are not applied due to the not received from the work client. We can follow the option number 1. Otherwise, you go for the option number 2. We simply receive the one bumper donation. Okay, now, so they deemed to be applied in the current previous year. Deemed to applied in the current previous year. But such amount not applied in the immediate next previous year. No, immediate next previous year. For example, in the 23-24, we are not able to apply due to any other reason. Mandatory applied should be the 24-25. If not applied in the 24-25, the required to pay tax in the 24-25 at the rate of 30%. At the rate of 30%, 115 BBI. 115 BBI. Okay, now 115 BBI. I will take an exam. So simple, sir. I have a income of my trust is the 20 lakhs. In the 15% is the standard deduction. Remaining 85%, 10 lakhs I applied for the charitable purpose. In 7 lakhs, I follow the option number 1 because I am not receiving the 4 lakhs money. So I can go for the option number 1. So they treat it as an application year. They treat it as deemed to be application in the year. But in the 3 lakhs, I follow the option number 2. Due to any other reason, I am not able to apply. So just apply the file a form number 9A. We can, this also treat as application deemed to be application in the year. But actual application, I will take one example, sir. This is the case 1, case 2, case 3. Okay, this is the case 3. So your income is the every year 10 lakhs. First 10 lakhs, 1,50,000 is the standard deduction. 8,50,000, you are applied the 5 lakhs. Remaining 3,50,000 required to pay the tax. Required to pay the tax. But we apply the option number 2 because any other reason I am not able to apply in the current year. So we make one declaration to the AO at least 2 months before the due date of filing. So the AO grant that exemption. So we can write that 3,50,000 is the deemed to be application in the year. Next year, your income is the 10 lakhs. Standard deduction is the 1,50,000. But your income is the 8,50,000. Out of standard is 8,50,000. But what is your actual application? Only 5 lakhs. What is your actual application? Only 5 lakhs. But wait. Sir, we have a already existing liability of 3,50,000 required to applied in the next year. But we are applied only 5 lakhs. So simply first that 5 lakh adjusted is the existing liability, existing responsibility. So current year application only 1,50,000. Current year application only 1,50,000. How to get this amount, sir? 5 lakhs minus 3.5. 5 lakhs minus 3.5 lakhs. So application is 1,50,000. So current year income is the 7 lakhs. Again the SC go for the option 2. We apply the 7 lakhs. Next year also my application will be the 5 lakhs. 5 lakhs. Next year my income is the 10 lakhs. 1,50,000 is the standard deduction. 8,50,000. So in 8,50,000 I file again option 2A. But sir, how much of income application in the current year? That is a nil. Why nil, sir? Why nil? Sir, what is your application? 5 lakhs. What is our already have a liability? 7 lakhs. So still we are not able to apply for the. First we have to discharge this. First you have to adjust against your existing liability. So in the 7 lakhs you applied only 5 lakhs. Remaining 2 lakhs we are required to pay the tax at the rate of 30%. 30%. Okay. In the next, so current year application will be the nil. Current year application will be the nil. Next year again we go for the option 2. So our income will be the nil. Our income will be the next year your income is the 10 lakhs. Standard deduction is the 1 lakh 50 and 8 lakh 50 is your income. Sir, what is your current year income? Nil, sir. Why? Sir, what is your application? 5 lakhs. But what is your already liability have? 8 lakh 50. So how can you write as a this amount? First you are adjusted your application against the your existing liability. So your current again you have the 8 lakh 50. Sir, you need to apply in the next year 8 lakh 50, but you are applied only 5 lakhs. Remaining 3 lakh 50 required to pay the tax at the rate of 30%. Remaining at the rate of 30%. At the rate of 30%. So again you go for the application. Again you go for the option 2. Again you go for the option 2. Okay, sir. So every year you go like that. So this is not happen, sir. As the AO find the what is the valid reason in the practical lab. AO ask the what is the reason you are not going to apply for the every time. SC find it. Every year this is not possible. Every year in the practical, every year is the not possible. Okay, sir. So I have a next section, sir. I have an income of the 20 lakhs. I have an income of the 20 lakhs. So 15% is the standard deduction. That is no issue. But remaining 85% 17 lakhs. Remaining 85% I have a wait, sir. Remaining 85% applied for the charitable purpose. So I need to pay the tax in the 7 lakhs. I need to pay the tax on the 7 lakhs only. I need to pay the tax on the 7 lakhs. But wait. In the option 2, I apply the in the option 11 to LA. Said the trust want to build the one school. Trust want to build the one school. So construction of one school is the 1 year income is not enough. 1 year income is not enough. So the trust want accumulated the every year 1 lakh income. Accumulated the every year 1 lakh accumulated the every year 1 lakh income. So if any income is accumulated for the specific purpose, first condition, if any income is accumulated for the specific purpose, such income is treated as a deemed application in the year of accumulation. Again repeating, sir. Such income is treated as a deemed application in the year of accumulation. But we need to satisfy the 5 condition. We need to satisfy the 5 condition. Very simple, sir. Option 11 sir. If any income is accumulated for the future purpose, future charitable purpose. If any income is accumulated for the future charitable purpose. Go with the accumulation. If any income is accumulated for the any specific purpose, any income is accumulated for the specific purpose, so wherein the 85% income is not applied during, but accumulated as set up, then such apart income is not included in every income. In the following conditions are satisfied. If not following conditions, otherwise we can write like that. Such income is set apart income is treated as a deemed application. Treated as a deemed application in the year of accumulation. In the year of accumulation. Okay, in the year of but we need to satisfy some condition. SC need to furnish the statement to the AO. That form number 10. SC need to furnish statement to the AO. So we need to mention the purpose and period. We need to mention the purpose and period. So maximum period not exceeding the 5 years. Okay now. Sir, statement should be filed at least 2 months before the due date of retaining. What is the due date for filing? At least 2 months before the due date of filing. And such money deposited in the 11.5 months. Because sir, I have a construction time is the 5 years. I accumulated every year 1 lakh. Where you need to deposit 1 lakh? Deposit 1 lakh into the safe investment mode only. And should not donate it to the any other person. Such amount not donated to the any. So accumulated income not donated to the any other person. Accumulated income is not donated to the any other person. So if you satisfy this 4 conditions, whatever the income accumulated by the trust, such income is deemed application in the year of accumulation. But what if violating any condition? What if violate the any condition? What is the condition, sir? So for example, it not deposited in the 11.5 modes or withdraw from the 11.5 modes. It exceed in the 5 years. It is used for some other purpose other than mentioned in the statement. For example, sir, in my statement mentioned I going to construct a school, but I applied for the temple. Even though such other purpose is the charitable purpose, this exemption is not applicable for you. Even though that other purpose, whatever the purpose not mentioned in the statement. Okay, sir. So what if sir? What if you are not applied in 5 years? If you donated to any other person, no. If not invest in the 11.5 modes, if you cease to invest in the 11.5 modes, for example, you are investing. Firstly, you invest in the 11.5 modes. During the 5 years, withdraw from the 11.5 modes. If you cease to students, so it applies for any other than purpose for which it other than person, ceases to remain invested as per the 11.5 modes. If not utilized with a specified time is not within the that 5 years, that specified time. So donated to the any other trust, donated to the any other. So what if? So any of the condition is violated, any of the condition, they are required to pay tax at the rate of 30%. Required to pay that at the rate of 30%. Required to pay that. In which year we required to pay, sir? In which year you required? In which year you required to pay? In which year you required to pay? Gupta, in which year you required to pay the tax? In the year of violation. In the year of, for example, we donated to the any other person. In the year of donation, we required to pay the tax. So no, sir, we not utilizing within the specified time. Expiry of that specified time. What is the expiry of that specified time? Don't worry, I will skip. Okay. For example, I accumulated in the 23-24. I accumulated in the. I required to apply at least next 5 years. Not in the year of accumulation. We need to check the next 5 years. Next 5 previous years. 24-25, 25-26, 26-27, 27-28, 28-29. So we need to accumulate for the next 5 years. We need to utilize for the at least next 5 years. Next 5 years, not so you are accumulating in the year of 23-24. We need to check the 24-25, 25-26, 26-27, 27-28, 20. So at least, so we are not utilizing this in this time, within the time required to pay tax at the in the year of 28-29, in the year of 28-29, in the last year required to pay tax at the rate of 30% in the year of 28-29. But how to check, sir? Sir, 1 year I accumulated 1 lakh here. 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 1 year I accumulated here. Need to check from everyone is a 23-24. No, sir. For this 1 lakh, we need to check this period. For this 1 lakh, we need to check from this next 5 years. For this 1 lakh, we need to check from this next 5 years. Okay, now for this 1 lakh, we need to check from next 5 years. Okay, now we need to check like that. We need to check like that. Now you can get the clarity of the point. Okay, so how to calculate the days means for this 1 lakh, we need to check next 5 years. For this 1 lakh, we need to check this 5 years. For this 1 lakh, we need to check next 5 years. For this 1 lakh, we need to check next 5 years. Okay, now you can get the clarity.
5 years
within the maximum time is the 5 years. Maximum time is 5. You can you can use the 2 years is not a problem, but not exceeding the 5 years. It is not exceeding the 5 years. So it is required to pay the tax in the last year. Required to pay the tax in the last fifth year, last year. Okay, okay, sir. So simply file a return of income. Sir, if denial the exemption, we are not file the return of income within the due date. If not file the return of income within the due date, we can deny this exemption. We cannot file the return of income, and statement to not file within the up to the due date of return of income. This statement to the ever not file within that, you can deny the exemption. Okay, okay, sir. So next we are with the explanation number 3. Explanation number 3. 40A3, sir. So if you make any payment for the single day, single person more than 10,000, such expenditure not allowed as a application. Such expenditure not treated as a application. Very simple point, sir. If a trust make any payment to a single person on a single day is more than 10,000 by other than cash. Other than sorry. So if a trust make any payment to a single person on single day for any expenditure through the cash, such amount is not treated as a deemed application. Such amount is not treated as a application. Such amount is not treated as a application. Okay, sir. That is the first section. Explanation number 3, sir. Explanation 3A, sir. 3A we can discuss after some time. 4A 1A, sir. Sir, if we make any payment to the residential person, if the trust make any payment to the residential person, so the TDS and TCS provision attracted for such payment, we can check it the points, sir, for a very simple points. Sir, if your trust make any payment to the residential person, so and TDS and TCS provisions are attracted for such transactions, but not deducted the TDS and TDS for the such transaction, so we can disallow the 30% expenditure. For example, if trust incur the 1 lakh expenditure, no TDS will be deducted. So 30,000 will not treat it as a application. Only 70,000 will treat it as a application. Only 70,000 treated as application. Okay. So what about the explanation number 3 is? Sir, very simple. Sir, if any temple, mosque, church, gurudwara, okay, now if you receive the donation for the repairs and renovation, if this is the donation for the repairs, the income tax gives the two options for this temple, this mosque, this church, this gurudwara. First option, sir, we treat it as a normal donation. 15% is a standard deduction. 85% as usual. Follow the 11-12 rules. But if you follow the corpus donation process, if the trust, so you have the two options, sir. Once the trust can treat the normal donation, the trust can treat the corpus donation. So first condition, sir, the amount received by either temple, mosque, church, gurudwar. Again repeat, the amount received by either temple, mosque, church, gurudwar. Okay, so the donation should be received for the repairs and renovation. The donation should be received for the repairs and renovation. This is the first condition, received by the only this, and for purpose is for the repairs and renovation. Income tax gives the two options to that temples and mosques and churches. First option, sir, such temples and mosques and churches can treat at the normal donation. If treat as a normal donation, apply the 11 and 2 section, 11, 12 section. Simply 15% is the standard deduction. Simply 15% is the standard deduction. Remaining 85% you required to pay the tax. Remaining 85%, whatever the amount applied for the charitable purpose, remaining amount we have to pay the tax in the income tax. Okay, sir, if any amount treated as a corpus donation, the trust have another option. They want to treat it as a corpus donation, that is a fully exempt. They want to treat the corpus donation. So whatever the amount received by the, so very simple, sir, whatever the amount received by the temple, mosque, church, gurudwar for the repairs and renovation, they can treat it the normal donation. Either they can treat it the corpus donation. If they can treat it the corpus donation, whatever the amount received by that, fully exempt under section 11. Fully exempt under section 11. But we need to satisfy the 4 conditions. We need to satisfy the 4 conditions. What is it? So such amount should be utilized for the repairs and renovation. Such amount should be utilized for the repairs and renovation, and should be invested in the 11/5 modes only. Should be invested in the 11/5 modes, and such amount should be separately identifiable, and should not be donated to the any other person. Should not be donated to the any other person. Then only we can claim the exemption under section 11. Okay, that is explanation number 3. Explanation number 3. Okay, sir. Next, sir, explanation number 5, sir. We talk about that. Explanation number 5, sir. So I have an income of the 10 lakhs. I have income of the 10 lakhs. And the 15% is the standard deduction. Remaining 85%, 8 lakh 50. But I applied for the charitable purposes 9 lakh 50. So in excess 1 lakh I will apply. In excess 1 lakh 50. But what is the SSC doubt, sir? Sir, can I carry for this 1 lakh for the next year? Can I carry for this 1 lakh for the next year? No, sir. Can I set out this 1 lakh for any other income? So we have the two questions. So simply, sir, I required to apply for a charitable purpose 8 lakh 50, but I actually applied for the 9 lakh 50. I actually applied for a charitable 9 lakh 50. So excessively applied the trust. Excessively applied by the trust for the charitable purpose is 1 lakh. So simply, they have the two questions. One, sir, can I carry for the next year to set up this losses against our next income? No, sir. Can I set up this income? So simply, whatever the excess expenditure incurred by the trust for the charitable purpose is going to be the lapse. Okay, na? Whatever the expenditure incurred by the trust in excess of income, that going to be the lapse, not be allowed to carry forward and set off. Simply, that loss will be the dead loss. Okay, sir. Okay, sir. Sir, explanation number 11. We talk about the explanation number 11. So what is the explanation number 11? Okay, now before going to the explanation, some other explanations, sir, we have. So we can just reconcile it, sir. We done with the definition. Yes, we done with the definition, and we done with the option number. Then we done with option number 1, and we done with option number 2, and we done with explanation number 2. We done with explanation number 3. I think 4A, explanation number 3A done. Should not be explanation number 4 done. I think not. No. Explanation 4 is pending. Wait. Explanation number 5 done. The excess amount application shall not be allowed to carry forward and set off. Okay, sir. For the next, we are with the explanation number 11. Sir, what is the explanation means? Very simple. I hope that you people are understand these points. Yes. We need a more speed or more slow. Enough. Telugu is okay. English is okay. More grammatical mistakes. So explanation 11, sir. Sir, this amendment come in the Finance Act 2022 for assessment year 22-23. Okay, na, sir. Sir, whenever treated as application, only in the payment basis only treated as application. In the payment basis, for example, you incur the expenditures of 5 lakhs. For example, you incur the expenditure of 30 lakhs. We incur the expenditure of 30 lakhs. In 30 lakhs, we paid the 21 lakhs. We paid the 21 lakhs in the 29 March. So, while calculating the 85% rule, we'll go with the 85%. Only 21 lakhs treated as a application. Sir, what about the remaining 9 lakhs? Not treated as application in the year of incur. Such amount treated as application in the year of payment. Sir, 9 lakhs paid in the August 2024. So that amount treated as application in the 25. That amount is treated as application in the 24, 25. I hope that you were able to get my point, sir. So, sir, irrespective whatever the method followed by the SSC, whatever the, for example, if SSC follow the mercantile system, even though for application you need to follow the payment basis. If SSC follow the cash basis, even though we need to follow the payment basis for the application. Simply, sir, we need to reduce the such amount as application should we make a payment. Actual payment is happened, then only we treat it as application. Simply only one line conclusion, sir. Whatever the actual payment made by the trust, that amount only treated as application in the year of payment. Sir, whatever the outstanding amounts, that amount also treated as application in the year of payment. If you paid in the next subsequent year, we treat as application in the subsequent year, not treated in the year of incur. Okay, sir. Next, explanation number 4. So some amount I am applied from the Corpus fund. Some amount I am applied.
Explanation one ద్వారా మనం SSC ఆఫీసర్ కి ఇంటిమేట్ చేస్తే అది అప్లికేషన్
we can utilize that explanation number, option number 1. In option number 1 we have utilized that. We can make an application to the assessing officer, we will not receive that amount. That's why we are not able to apply it for that. But any other reason also we can go for the option number 2. Okay, any other. So no sir, I have some Corpus fund. I make a application from that Corpus. I make an application for that Corpus fund, not treated as application, which is not treated as a application, not treated as a application in the year of making. So when it is treated as application, sir, when trust redeposited such amount in the Corpus fund, when such amount is redeposited into the Corpus fund, redeposited into the Corpus fund, in the such year only we treat it as a application. In such year only we treat it as a application. In such year only we treat it as a application. Okay, don't worry, we can make example. So they have Balaji Trust, that is a temple. Due to the COVID, the trust was closed. Due to the COVID, the trust was closed. So the amount is applied out of the Corpus 25 lakhs in the previous year 22-23. So in 23-20 we not treated as a application. In 22-23 is not treated as a application. But this 25 lakhs deposited back into the Corpus in the 25-26. Deposited back in the Corpus in the 25-26. In the year of deposit it treated as application. In the year of deposit treated as a application. In the year of redeposit treated as a application, subject to some conditions. Subject to some conditions. Okay, na? Very simple, sir. Sir, I make an application out of the Corpus fund. When the trust make an application out of the Corpus, in the year of application not treated as application. When it treated as application, sir? When it redeposited into the Corpus. When it redeposited in the Corpus fund, only in that year it treated as a application. So in
application sir, exempt kada Corpus అనేది.
Corpus fund, I am talking about the Corpus
fund.
This Corpus is exempt, sir. This Corpus is exempt. This Corpus is exempt. But I make that application for that another purpose, another charitable purpose. I make an application for another charitable. I required to incur the expenditure from my income. But due to the COVID, I don't have any income. Okay, now. So I incur the such expenditure from the Corpus fund. I incur the expenditure from
Corpus fund అంటే 11.5
that is some other fund. That is a Corpus donation. This is a Corpus fund means this fund is created for a specific purpose. This fund is only utilized for that purpose only.
అవుట్ ఆఫ్ డొనేషన్స్ కాకుండా ఇంకా వేరే
This out of income, out of donation, they created some fund for the only specific purpose. They created some fund for the only specific. That is the Corpus fund. Okay. So if any amount is applied out of the Corpus fund, not treated as in the year of application, but is treated as application in the year of redeposited such amount in the Corpus. Redeposit such amount in the Corpus. Okay. That we can, but we need to satisfy some condition. We need to satisfy what is that? So whatever the application, such application should be in India only. Whatever the application should be India only. Okay, now donation, such amount should not be donated to the others. Such application for the incur some charitable activities, not donated to others. Okay, sir. And 40A, 43A will be applicable, and the TDS provisions and cash payment provisions is applicable for that. And carry forward set off is not allowed. So why if any excess expenditure incur, that amount is not allowed to carry forward. And application should not be beneficial for the specified person, should not be beneficial for the specified relatives, and should be invested in the. Sir, how many days take? How much? What is the maximum time allowed by the income tax department to the trust to redeposit such amount in the Corpus? Maximum within the 5 years from the end of the financial year in which amount is applied. Okay, na? So in the year of application from that end of the year. So in our example, so we are applied in that 22-23. Maximum 5 years. 28, 29, 27. 28, we can redeposit into only 20. After 27, 28 we deposit now. Not allowed as application. application. So maximum time to redeposit it in the corpus only 5 years. Maximum time to redeposit the trust in only 5 years. Only 5 years. Okay. Only 5 years. Sir, for the construction of one house, for the construction.
Application around 5 years of deposit. Tax and pay cheyali.
Not required to pay tax. So we treat it as application, then only we have to reduce our income kada. Otherwise, we are not going to reduce any income means we indirectly pay tax on such amount. We are indirectly pay tax on such amount. That is only now. We can in the sale price we reduce the cost, then only get the income. If not reduce that expenditure, it means we pay tax on entire selling price. So simply whatever the incur expenditure now, that not allowed. That expenditure is the not allowed expenditure. Okay, sir, I want to construct the one house. I want to construct the one school. Okay, now the school value is the 50 lakhs. So 20 lakhs is incurred from my out of pocket. But 30 lakhs I don't have that money. So I just take a loan from the HDFC bank. I make a loan from the HDFC bank and I construct the school. But this 20 lakhs write as application in the year of incur but this 30 lakhs not write as application in the year of application. Only write as application in the year of repayment. In the year of repayment to the loan and in the year of repayment to the bank and financial. For example, I repaid the 10 lakhs in the 24-25. 25 another 10 lakhs. So 25-25 we can write as a 10 lakhs as application. 25-26 we can write as a 10 lakhs as application. 26-27 we write as application as a 10 lakhs. Okay. But what is some condition? We have some other conditions. Sir, application should be in India. That application should be very simple. Sir, any amount apply for the treated as a application. Should not be the donation. Should not be donation. So we want if you can borrow any amount from the banks and everything, not donate to the others. Not donated to the others. And 48 cash and TDS provisions as usually applicable, and set off and carry forward provisions are not applicable, and should be made within the 5 years from the end of the financial. The repayment should be made within the 5 years from the end of the financial. In which year amount applied from the loan, not taken from the loan. In which year amount applied from the loan should be made within the 5 years. Okay. Sir, trust can make any donations to another trust. Trust can make any donation for another trust. The treated as application or not application. Trust can make the normal donation. Trust can make the normal donation. If take the 10 lakhs, 85% amount treated as a application. 85% amount treated as a application. Okay now. So trust can make a corpus donation, that is not allowed. Trust can make a corpus donation, that is not allowed. So if any trust can make any donation to another trust, that is allowed. That is extend to 85% of the donation. That extend to 85. But trust can make any corpus donation, that is not allowed. Trust can make any corpus, that is not allowed. Okay now. So if any donation to another trust which are registered on the 12AB or institution shall be treated as application for the charitable and religious purpose only to the extent of 85% of such donation amount. Only extent of the 85% of such donation amount. So, but this is not allowed to donate as a corpus. No, donate as a corpus. Accumulate specified purpose is done. Okay, take a break of 5 minutes. This class will be continued here. 5 minutes break.
Stop just
7:30. It's continue 5 minutes. Mali aapes next cheyenge. Huh? Break is called. English.
అంటే లైక్ రీచ్ అవుతుంది సబ్జెక్ట్ సబ్జెక్ట్ రీచ్ అవుతుంది స్మాల్ బట్ అక్కడ గ్రూప్స్ చేసుకోవాలి
స్పీడ్ ఉందా బాగా
అర్థమవుతుంది ఆల్రెడీ విన్న వాళ్ళకి అర్థమవుతుంది ఫస్ట్ ఫ్రెషర్స్ కాదు
ఫ్రెషర్స్కి ఎలా ఎందుకు చెప్తాను
ఫ్రెషర్స్
రివిజన్ క్లాస్ కాబట్టి ఎనఫ్
అప్లోడ్ చేద్దాం అంటారు
చేయాలి ఇంత బాగా చెప్పాక చెప్తారు
ఏం బాగా చెప్తున్నా ఏం అయిపోతుంది చాలా త్వరగా రివైజ్ చేసేది రేపటి నుంచి రాసుకున్నాండి మీకు ఏం రావాలి ఇంగ్లీష్ చెప్పేస్తాను
చెప్పండి సార్ మనకున్నంత అదృష్టవంతులు ఎవరు ఉంటారు
బుక్ వల్లే ఏమైనా కన్ఫ్యూజన్ రావచ్చు కదా అక్కడక్కడ తిప్పుతున్నాను కదా మధ్య మధ్యలో
డిస్క్రిప్షన్ ఆ చాప్టర్ మొత్తం కట్ చేసి అటాచ్ చేయండి డిస్క్రిప్షన్ చదువు బ్రేక్ తీసుకోండి సాఫ్ట్ కాపీ బ్రేక్ తీసుకోండి అటాచ్ చేయండి కింద
బ్రేక్ చేసే ఉన్నాను
Okay, sir, if any trust have a business income of the trust, if any trust have a business income of the trust, we need to check that income is incidental to attainment of the main objective or not. What is the meaning, sir? So, for example, in Satyanarayana, in Annavaram, in Satyanarayana, so they run the one hotel but distribute as a prasada. So, whatever the income earned by the trust, okay, distribute as a prasad. So whatever the income earned by the trust, that is a business income, because the trust main objective is providing all the services to the bund. That whatever the business income earned by the trust, that is incidental to attainment of the main objective. So that is income only allowed. That income is only allowed. So what if sir same Annavaram trust run a one gym. So whatever the income earned by the trust from such gym, such is not incidental to attainment of the main objective, because distributed prasada is incidental to main objective, but running the gyms, running the sports, conducting the club games, that is not incidental to attainment of the main objective of the income. So I am talking about the which income is incidental to attainment of the main objective. The trust need to maintain the separate books of accounts for that business income and that charitable income. Trust need to maintain the books of accounts for separate books of accounts for maintenance. Sir, if any income is concealed, means, for example, sir, if any business income, any charitable income is concealed, should not avail the exemption in respect of such concealed income. For example, I have a 15 lakhs income. In a 15 lakhs, 7 lakhs is the charitable income, 8 lakhs is the business income. So we can give these separate books. We can get the exemption on entire income. But what happens, sir? Some income, 3 lakhs income is the concealed income. For example, in the 18 lakhs, 3 lakhs is the concealed, because in this income both business income is included and charitable income is. We not get any exemption on that 3 lakhs. Okay, now we not get any exemption on that 3 lakhs. Okay, now can get my answer. We cannot get any exemption on that 3 lakhs. Okay, we not get any exemption on that 3 lakhs. Not get any income on that 3 lakhs. Okay, that is the business income. Next important point. Okay, sir, I purchased some computers. Can allow as a deduction? Can allow as application? Yes, sir. So capital expenditure allows as application, but no depreciation allowed on such capital expenditure. No depreciation is allowed on. The depreciation on such capital shall not be considered as a application. Depreciation shall not be considered as a application. Okay, sir. Sir, how to obtain the 11 and 12 sir applications, sir? Very simple, sir. We can apply you should be get the registration section 12AB, and you have to maintain if the total income before claiming this exemption, is a more than basic exemption, required to maintain the books of accounts, and documents, required to maintain the books of accounts and required to be audited from the auditor and furnish the report within the due date. Okay, sir. So what is the 3 conditions we need to satisfy? What is the condition need to satisfy the trust to get these exemptions? Very simple, sir. We have to register under the 12AB, and if this total income before claiming this income more than basic exemption limit, have to maintain the books of accounts. We get the audited Books of account should be audited by the chartered accountant, and we have to file that report within the income tax under section 44AB, under section 44AB, time limit, within the time limit given under section 44AB. Okay, sir. So how to get the registration, sir? This can you read your own. This registration time limit, read your own. Okay, registration time limit, read your own. So now we go with the process of registration. Now we go with the process of registration. What is the process of registration, sir? So we can make one application, receipt of application, sir, sometimes without inquiry. For example, we make an application for the fresh registration. For granting a provisional registration, there is no inquiry is required, sir. No, sir, we are registered already under the old act. We get just converted from the old act to new act. There is no fresh registration, no inquiries happen, sir. So in these two scenarios, no inquiries happen. In these two scenarios, granting a provisional registration, conversion from the old act to new act, there is no fresh registration, no inquiries happen. In this scenario, CAT, PCAT just given a pass an order for without any inquiry. But in CAT based on the receipt of shall pass an order the provisional registrations in these two scenarios. But in another case, CAT PCAT shall inquiry. What need to inquiry, sir? So they call for the document. They call for the documents and information about they satisfy themselves with genuineness of the activity. Then only pass the order for the application. Okay, sir. Sir, in the trust there are the two processes, without inquiry, with inquiry. In without inquiry, just pass their order for the provisional registration or normal registration. With inquiry, they call for the documents, they verify the document, they satisfy themselves about the genuinity of the activity, they confirm that they are able to comply the other laws and regulation, they are able to comply the any other laws and regulation, they are able to comply such. Okay. The trust which are applicable to the trust, after satisfying that he may pass order for the registration, either be registration, either be cancellation in case of provisional registration, in case so within the time limit given by the above table. Okay, okay, sir. So where the registration of provisional registration may be subsequently cancelled when, sir, CAT PCAT have a specified violation occur in the notice that there is a specified violation is happen in the trust. No, sir, CAT PCAT have received the reference from the AO, sir, in the 143.3 in the scrutiny assessment, the assessing officer just intimated to the PCA said that some violations is happen in the trust. Okay, na? So sometimes has been selected on the risk strategies. In this scenario, they call for the such document. They call for the document. Is satisfied that there is really specified violation is happened. Specified violation after giving the OBH, they can cancel the registration. Sir, if not satisfied, they given the order, again occurrence of specified violation, they pass the order, refuse to cancel the registration. They pass the order to refuse to cancel the registration after passing within the 6 months from the end of the quarter. So what is the time available to pass this order? Within the 6 months from the end of the quarter, we make an application. Okay, sir, forward this copy of order AO and such. Sir, what is the specified violation? Very simple, sir. The trust income is applied for any other person other than objects of the trust. No, sir. Next, their business is not incidental to attainment. Simply, sir, the unwarranted trust run for the gym. Run the gym. That is not. No, sir. They not maintain the separate books of account. They not maintain the separate books of account for the incidental income. Where trust is applied any part of income is a private and religious purpose. Not applied. So it should be applied for the only genuine private and religious. So the trust is applied for income for the community or caste. That is also specified violation. No, sir, the trust activity is not genuine. The trust activity is not genuine. Are not complied with the conditions. Not complied with the conditions prescribed by the income tax. So trust is not complied with any other law which are applicable to the trust, and the application registry is not complied. And whatever the application made by the assessee, whatever the application made by the trust for the registration, that is not completed. That information is not correct. Whatever the information submitted by the trust, that is not correct. So in this 5 scenario, they treat it as a specified violation is happened. So where it is a specified violation is happened, so very simple. How to remember, sir? So the trustee, the income is applied for any other purpose other than charitable objective. First, next, this is not incidental to attainment of the main objective. Then separate books of accounts are not maintained, and they applied for the private and religious. They applied for the community and caste, and they are not genuine, not carried out in accordance with the conditions. Okay, what are the application made by the trust for the registration not completed, and it is misleading information, it is incorrect information. They are not completed any other law which are applicable to the trust, Okay. So next, denial of exemption. Sometimes we can deny the exemption. When, sir? Sir, income applied for the private religious purpose. For example, sir, this trust is only for the Hindus, this trust is only for the Christians, this trust is only for the Muslims. In that type of trust, in that only private religious purpose, that type of any exemption will not get. Okay, sir. Next, the income for the benefit of any particular religious or community. This trust is only for that caste people, that community people. That is also not applicable. So benefit for specified persons. Sir, this income is applied for the benefit of the specified. Then only exemption is denied. Okay na. Sir, fund of the trust, sir, all the income, all the fund should be deposited in the 11.5 modes. Not only corpus fund, sir. Corpus donation. Every fund we need to deposit in the 11.5 modes only. 11.5 modes only. Okay. Sir, meaning of the specified person, author and founder, the person who donation more than 50,000 previous year, founder and donor of the HUF and member of the HUF. If the founder and donor of the HUF, member of the HUF, and Karta, trustee and manager, relative of the any founder, relative of the founder, or donor, or member, or trustee, or manager. So any concern, we have any substantial interest of that company, substantial interest. This is all the related. For example, sir, if any trust run the either education institution or medical institution, medical facilities, it provides these facilities to the specified purpose. So very simple, sir. We not deny your exemption. Simply, whatever the service you provide now, take the market value such service. Take the market value such service shall be taxable. Shall be taxable as a income. Shall be taxable. Shall be treated as income. But no exemption available on such income. No exemption available on such income. Very simple, sir. If any trust run the education or medical facility, the facilities provided for the specified person, we are not going to deny the exemption of the entire trust. Not going to deny the exemption of the entire trust. Very simple, only one thing we need to do. So whatever the service provided by the trust, such income, so find the fair market value of the such income. Find the fair market value of such income. So fair market of such income treated as the income of the trust, and you are required to pay the tax on such income. But 11-12 exemption is not applicable on such in respect of such income. Which income, sir? Which income is derived from the specified person? Which income is derived from the specified person? Which income is derived from the specified person? Okay, na? Done, sir. Sir, capital gain deemed to be applied for the charitable. If any capital gain deemed to apply for the charitable purpose, if any capital gain deemed to apply for the charitable service. Sir, if any capital asset transferred by the trust or if a net consideration utilized for the acquisition of another capital, then the full capital gain is exempt. Very simple, sir. I am transferred the one old capital asset. Whatever the net consideration, that full net consideration utilized for the purchase of another capital asset, then full capital gain is exempt. Full capital gain is exempt. If net consideration fully utilized, full capital gain is exempt. If net consideration partly utilized, then cost of old asset minus cost of new asset is only exempt. Shall be exempt. Cost of old asset minus cost of new asset minus cost of old asset. Okay, na? Is be exempt. Cost of old asset minus cost of new asset only exempt. Okay, that's it. So the specified income is taxable at the rate of 30%. So where it's so income accrued in excess of 50%, not allowed any of the specified provisions. Deemed income. This everything you have to read your own, sir. Okay, sir. We done with it. I think did with all those things. One thing is pending. Sir, if the charitable trust, advancement of any other charitable, if any other objective of the general public utility, okay, now it is not, it is activity related. Sir, if the charitable trust, advancement of any other objective, it is a general, it is not actually charitable act. It is not a really charitable act. It is not an object of the charitable trust. It is not, but it is advanced, but it is used for the general public. But in that activity, including any trade or commerce, it is possible. In that activity, including any trade and commerce, or business, but it treated as a charitable. But in that activity included some trade or commerce. If whatever the aggregate amount received from that business, whatever the aggregate is more than the 20% of the total receipt, the more whatever exemption of 11 and 12 is not given on that particular, in that particular. So no need to cancel any reaches. For example, sir, if the charitable trust advancement of any other object, which is a general public, but in that activity, if included it related to any trade or commerce, so whatever the income received from that activity, aggregate income received, that is more than 20% of aggregate total receipt of the trust, then what 11-12 exemption is not applied. 11-12 exemption, so the benefit of 11-12 is not, sorry, the benefit of 11-12 is, wait.
Give us some examples.
I will give it, sir. Sure. Sir, one other charitable trust, the income is the 100 lakhs. In that, trade activity is related to the 30 lakhs. In that, you can 30 by 100. So simply it more than 20%. If this condition is satisfied, the 11-12 benefit is not available to the trust in that particular year. 11-12 benefit is not available to the trust, not available to the trust in that particular year, but no cancellation, registration is not cancelled due to that reason, not cancel is happened, no registration was not cancelled due to that reason. Okay, next.
If it is more than 20%, it reads as a business activity.
It read as a business activity, no exemption is given under section 11 and 12.
We cannot cancel the registration.
But we can't cancel the cash due to that reason. Due to that reason. Okay. So we can talk about some institutions and everything. Anonymous donation. We talk about some anonymous donation. Sir, anonymous donation means that the donor is not known the donor. We are not able to find the donor. We are not able to find the anonymous donation means any donation where the person of the receiving such donation does not maintain the records of the donor. So required to pay the tax at the rate of 30%. Sir, how much amount? Which amount is treated as it? 30%, sir. Total anonymous donation. Total anonymous donation less. Total anonymous donation less 50% of the total donation or 1 lakh, whichever is higher. In the total donation including the corpus and government grants. So this amount is treated as a anonymous donation required to pay tax at the rate of 30%. Required to pay tax at the rate of 30%. Okay. I'm talking about. Sir, anonymous donation. I received the 10 crores of the cash from the limited schools. In that, all the trustee members are my persons only. All the trustee members are my relatives only. So in this happened that black money converted into the white money. So the income tax put the one rule. So students, sir, fun fact, any anonymous donation, the tax rate will be the 30%. 11-12 exemption is not applicable on that anonymous donation. But how to compute the anonymous donation? Total anonymous donation is received. Total less 5% of the total donation or 1 lakh, whichever is higher. Remaining 2,50,000 taxable at the rate of 30%. Sir, what about this 2 lakhs? Sir? What about this less amount? We can applicable the 11 and 12 on that amount. We can apply the section 11 and 12 on that amount. We can apply the section 11 and 12. So simply this 2 lakhs we can add here. This 2 lakhs we can add here. We can add here. So we can add here. This 2 lakhs we can add here. Okay. Next. But sir, this is applicable to the only charitable trust. This section is applicable to the only charitable trust. Sir, it is exclusively religious trust. Anonymous donation provisions is not applicable. It doesn't mean that it's not liable to tax under the income tax. We can simply apply the 11 and 12 rules. Simply apply the 11. Simply say it is not anonymous donation. Not treated as a normal donation. Treated as a normal donation. And 85%, 15% rule will go into. So if the trust is the charitable plus religious. For example, trustees run the schools and hospitals and others. Simply sir, we can define that trustees run the schools. The trustees amount is applied for only for the purpose of school. We can apply the 115 BBC and anonymous donation. Next, only for the hospital we can apply. For others, this is not apply. Others is not going to apply. So for example, if the Balaji Trust maintain the hundi, sir, school hundi for the purpose of hospital hundi, for the purpose of temple. So any amount deposit these hundis, the 115 BC applicable only that amount, only on that amount. Only this amount. But deposit in the temple hundi and other hundi, 115 BC is not going to be attracted. 115 is not going to be attracted. Don't worry, sir. I will take an example. So Nidhi Limited is the trustee under section 12AB. Income derived from the property is the 20 lakhs. Okay, now donation received is the 40 lakhs. Donation received is the 40. In this, including the 4 lakh 50 is the anonymous donation, 3 lakhs is the corpus donation. And the amount is applied for the charitable 3 lakh 20. Okay, sir. Income from the property is the 20 lakhs and donations is the 32 lakh 50,000. Donation is the, how to get the 32 lakh 50,000, sir? Very simple. 40 lakhs your donation, 40 lakhs zero. But in that corpus donation is included. In that corpus donation is included. Corpus donation is included. Sir, how much? 3 lakhs because that is the exempt. And in this anonymous donation also included. 4.5 lakhs. 4.5 lakhs. Why, sir? Anonymous donation will be taxable at the rate of 30%. It's not 11-12 is not applicable. 11-12 is, that's why 30 lakh 3 lakhs, sir. So again, so we go for the how to compute the anonymous donation. Sir, how much amount is 4 lakh 50? What is the total donation, sir? Total donation. What is the total? 5% of total donation. What is the total donation? 40 lakhs, na? 40 lakhs into 5% and 2 lakhs. 2 lakhs or 1 lakh, whichever is higher. So you can reduce the 2 lakhs. So this amount is taxable at the rate of 30%. Sir, what about this amount, sir? just add these 2 lakhs here, just add these 2 lakhs here before applying the 15% 85% rule. Before applying the 15% 80, you get the 54 lakh 50, we get the 54 lakh 50. So after that we can apply the 15% rule. Okay, so what about this 3 lakhs? This is fully exempt, that's corpus donation is the fully exempt. So after that apply the 32 lakhs, we can reduce the 32 lakhs. Why sir? This is applied for the charitable, so this amount is the taxable in the normal tax rate. This 2 lakhs is taxable at the rate of 30%. So total taxable amount is 1682,500. 1682,500. Okay, sir. Sir, this if anonymous donation received exclusive religious trust, this section is not going to attract. This section is not going to be attracted. Sir, wholly charitable trust, this section is going to be attracted. Okay, sir. Sir, if exclusive religious trust received this amount, simply apply the 11 and 12 rules. Section 11 and 12 rules. Both either sir, we can, that income is applied towards the school and hospitals, we can apply the anonymous donation rules. We can apply for other purpose, we can apply the 11 and 12 rules. 11 and 12 rules. Very simple sir. Wholly exclusively charitable trust, anonymous donation rules are applicable. Only charitable trust. Wholly religious trust, 11 and 12 rules are applicable. Sir, it's a both mixed, religious and charitable. If whatever the income applied towards the schools and hospitals, in that income, in that donation, we can apply the anonymous donation rules. Remaining amount, we can apply the 11 and 12 rules. Remaining amount, we can apply the 11 and 12 rules. 11 and 12 rules. Okay, na sir? I think you get the anonymous donation clarity. You people are getting. Sir, 1023 sir. Sir, if any university or education institution or hospital substantially financed by the government, if any income is substantially financed by the government, what is the government sir? So if the total received government grant is the 50% or total government grant, so whatever the income earned by such education institutions, such medicals, not for the profit, shall be fully exempt from the tax and not required to registration, not required to any registration. Sir, if any university or education or hospital, if any university or education hospitals which are solely for the education, medical and not for the profit purpose, and aggregate annual receipt up to 5 crores. Aggregate annual receipt is up to 5 crores. Sir, which type of education sir? And which education is not substantially financed by the government? Which university not substantially financed by the government? Which hospital not substantially financed? So we can simply have government schools and government hospitals cover under the point. So, but I'm talking about a small education institution, small university and small hospitals. Sir, if any university, if any education, if any hospitals is solely established for the not-profit purpose, but the total aggregate annual receipts, we can aggregate from the schools and annuals and everything, is less than 5 crores, whatever the income earned by the trust is fully exempt. That is fully exempt, not required to take any registration, not required to take any. Sir, other than that, we are not covering the substantially financed, we are not covering the annual receipt 5 crores, we can take the registration. We take the registration. Sir, what are the process of registration? Same 11 and 12 rules are applicable to this institution, only except one rule sir, that is the option number 1 and 2. Option number 1, so in the section 11 we given the option number 1. If any trust not receive the money due to the outstanding, so if any trust not receive the money due to the outstanding, we can make we can file one declaration to the AO. We can treat as that amount as the application in the current year, in the year of. Okay. So, but if any trust not is any other reason, we can make that option 2. So the option number 1, 2 is not applicable to the institution. So whatever actually applies, that only treat as a application. Okay, now whatever application, that only treat as application. Okay, now. So this is all about the trust. I hope that guys you are able to understand this concept in the full manner. I will complete the charitable trust in one way, one go. In this 1 hour, if this video is really useful for all the South Indian students, just put your comment. It's a good sir, and you can please upload the remaining videos also. Put that comment. It is also encouraging to me. If you really like this video, please subscribe my channel and share it to your friends. Thank you very much.